Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Where everybody at, man? And from that, I done made sure I get back to the highs to make sure that I get a chance to do the price action recap. There ain't nobody here. Where everybody at, man? Gang, where y'all at? I got me out by myself. What's going on, Kim? Kim, where the rest of your classmates at, Kim? Do this intro. Hey, if y'all don't start pulling up, I'm out of here. It's Friday. I ain't been on here all week already. Y'all done gave up on me already. Y'all done jumped ship on me already. It's Friday. I'm gonna do this intro. If y'all ain't here, I'm gone. Y'all gave up on me. I had stuff going on and I couldn't be here 4 days. I ain't got the patience. You ain't got the attention span of a gnat. That's what my mama used to always tell me. You ain't got the attention span of a gnat. Now that I'm through fussing. Good evening. If this first time tuned in to Tim's Tidbits, allow me to say, welcome. If it's not the first time tuned in to Tim's Tidbits, and I know it ain't the first time because ain't nobody here but you, Kim, I still want to say welcome. And give you a nice hearty, well, thank you, Kimberly, for being the only one to pull up on this Friday evening when I made sure that I get all the way back home to be able to do the price action recap with you all. I heard somebody come in the door. Somebody here besides you now, Kim. Now, if you don't know who I am, which you already do, because it wasn't nobody but Kim and not one other person, but my name is Timothy Lee Rogers Sr., a.k.a. Rania Grande. That should be a big spot if you don't hablo español. And you're now in tune to another episode of the NQ, Intraday Action Recap. You feel me? Yes, sir. And you already know, man, this episode of the Price Action Recap is being brought to you by the magical Fibonacci tool. Trading secrets that feel illegal to know. Coming soon. You feel me? All right, man. Enough for the salesy promo. Right? Do me a favor, hit a like for the algorithm. And subscribe to the channel if you ain't. Oh, I forgot. Ain't nobody there but Kim. So yeah, she already subscribed to the channel. How y'all doing this evening, man? We got Deborah pulled up in the Zoom. Steve pulled up in the Zoom. We got a couple people pulled up. Hey man, everybody else they done forgot about me, man. Everybody else done forgot about me. They you know what I'm saying? It was like, hey man, Tim ain't been going live. We finna jump ship, man. We finna go look at another streamer, man. Tim don't be coming through with a hard hitting analysis like we want to. You know what I'm saying? So we gonna jump ship and go to another streamer channel, man. We're gonna go to somebody who day trade live in front of us so that we can just copy their trades. We ain't trying to learn nothing. We just gonna go to the streamers that day trade live and so I can copy their trades and I can make money without learning how to fish. You know what I'm saying? I can learn. What's happening? RG Cutter. Hey, RG Cutter, I ain't never seen that name before, man. Y'all give it up for RG Cutter for pulling up. RG Cutter. If this ain't your first time tuning in, RG Cutter, I jollipies. I just don't remember that name because I be remembering certain stuff. And when you got this little red and it's got like the RG with the little logo, that's my first time ever seeing that. You know what I'm saying? You coming through with the hard hitting graphics on your little avatar there. But welcome, RG Cutter. Kim, since you the only one over there, you got to take here to learn to share job. You got to type welcome RG Cutter. Kim, you can't be slipping on your responsibilities. Since here to learn and share ain't here, when I shout somebody new out, you got to type in the chat, hey, welcome RG Cutter. All right? And I still don't see it, Kim. Lord have mercy. Y'all, man, y'all. Kim ain't it, man. Kim slacking on her job, man. Oh, there she go. All right, give it up for Kim for pulling up. You know what I'm saying? Finally getting to her job. Hey, man. Since we ain't been here all week, we just going to run through. We're going to look at the week. All right, we're going to look at the week, so we're going to go ahead and get to it. Did price do anything this week that caught you off guard? If price did something this week that caught you off guard, raise your hand, drop it in the chat, yell, hey, Tim, I was expecting this, and price did that. You know what I'm saying? If it did, let me know, and we'll go through and talk about it, man. I'm constantly like dusting stuff. I got like my whole setup. My setup is I got like a white desk that I built, and so like dust be like everywhere. It be driving me crazy. So I'm constantly dusting like every day. I'm like, where does all this dust come from, man? Dust be like everywhere. Constant dust. I'm thinking like, oh, it's white. It ain't gonna be that bad. Cause you know when you can see like dust on black, like on the black, it just look dusty all the time. Like I'm constantly dusting. This white, oh my goodness. It's like a dust magnet. It's horrible. I'm constantly just dusting every day. Maybe I got like OCD or something. But I'm constantly dusting all day long. I know y'all ain't tuning in for that. I was just wasting a little bit of time to see if anybody had any questions about anything, but y'all ain't got no questions. Y'all just want to see what I got to say. Before I start saying that, did anybody do any studying or trading? Anybody that's in, ain't nobody in there but Steve, YouTube, you can drop it in the chat. Deborah, you did any studying or trading? It could be live trade, paper trading, I don't care. You did any studying or trading this week? Steve, you did any studying or trading this week?
Yes, sir. I trade every day.
You traded every day?
I took a trade today.
You took a trade today? That's what's up.
I took a short.
You took a short today.
Yeah, similar to where you took one, but I didn't hold it that long.
How you know where I took mine? I ain't showed no trade. I just talked
Your
about the levels.
screenshot.
I just talked about the levels. So how long you know I held my trade? You don't know how long I held.
Well, I saw the amount.
Don't be worried.
Don't be 10% of it.
Don't be pocket watching. Don't be pocket watching me.
I'm not pocket watching.
I saw the amount. I ain't holding.
Hey, those are aspirations.
What's up, little one? RG Cutter said it took 2 trades today. Kim was paper trading. That's what's up, man. did price do as y'all took trades? So did price do as you expected it, or were you just shooting like in the dark? You were just guessing and gambling. You know what I'm saying? Did price go in accordance to your analysis? You waited on time and price. Did it work out? You trade Meta. RG Cutter say I trade Meta. That's what's up. You trade shares or you trade options? What you trade, RG Cutter? You trade shares or you trade options? And do you use ICT concepts? So Steve, you say you've been trading every day. So how have you found price this week? Have you found price to be difficult this week, or has it been, it's been going fairly according to what you anticipated it to do? Talk to me.
I have to be extra patient and let price, tip his hand to me. But after it does that, because especially with all this geopolitical stuff going on, you can pretty much, almost fade every rally.
Y'all give it up for Steve, man. That's exactly what I wanted to hear you say. I want you to hear you say you've been having to be patient and waiting on price to tip his hand, because all week they've been doing the Lord's work outside of the New York session. But when we come into the New York session, you got to be Patience McGee. Y'all, when I was building my desk, I did some. I had my light plugged up and I pulled it a certain way. And when I put it one of my lights, when I put it a certain way, it did something to either the inside of the light or something with the plug. And now it keep like going out on me. And me no like that ain't, see how it be messing with that over there when the light go off. All right. And me no likey that. Me no likey that at all. Hopefully it stay on. But you have to be patient during the New York session, you know what I'm saying, lately. And y'all already know, I talk about this a lot. I say that the market, it does the Lord work in different sessions. It goes through phases where it'll do the Lord's work in the Asian, then it'll do the Lord's work in the London, then it'll do the Lord's work in the New York session, either the whole day or the morning and the afternoon. But it go through phases where it's just beautiful price action inside one of those sessions. And it's like it go through phases where it's always like, and lately, man, matter of fact, my partner called me from Mississippi today. Dick, man, I called you the other day, man. And well, I looked at the charts in the evening. Well, that counter had to move 500 points, man. You know what I'm saying? And it was during the evening time. Cause it be doing the Lord's work during the Asian session. But Rhonda, welcome to class. Better late than never. You've been doing any trading or studying this week? Paper trading, live trading, just studying. What you been doing this week, Rhonda? Talk to me. Now Rhonda coming in acting like she can't talk.
I had to unmute. No, I only been paper trading because, as you know, last year I blew my account, and so I was just like done with it for a while. So I've only been paper trading, but I was in the green, just trying to pass that funded account again. But yeah, just still learning.
Okay, you confused me for a second. I was with you. You was like, hey, I blew my account last year, so I backed off of trading, but I'm just paper trading right now. And then you said just trying to pass the funded account. So are you paper trading or are you trading the eval? Like what?
Trading the eval, so trying to pass this evaluation. So I guess that's the same in my eyes. That's the same because it's not real money.
So you're not paper trading, you're trading the eval.
Yes.
Okay. See, you can't be trying to cheat the system. That's real money. You ain't making no money, but that's real money because you paid for that eval. So right now, you're just trading an eval. You ain't making nothing right now, but you put money into it, so you're not paper trading. Paper trading, you ain't got no skin in the game. You just trading a paper account. You ain't making no money. You ain't losing no money. But since you paid for an eval, you trading an eval.
Yes, I got $29 invested.
29. Do you know how many slices of pizza and drink I can get from Sam's Club for $29?
About 5.5.
10. 10, 250. 250 for a slice of pizza and a drink. 10 pepperoni combos for $29. Hear me.
Did you buy Lump his birthday pizza with the $5 I sent you?
I ate it too. I bought it for him and I ate it. He is 8.5 hours away from me. So I bought that pizza and I ate it while I was on FaceTime with him. I said, ooh, it tastes so good. And I thank you for the pizza yesterday.
No problem. Next time say Red Lobster, then he might get $20 for his birthday gift.
Hey, speaking of birthday gifts, today is my daughter Maya's 26th birthday. Whoo, I'm getting old. I called this joker this morning to, you know what I'm saying, send her some money for her birthday. She ain't answered the phone, right? So I sent her a voice message. She gonna text me back probably about 12:30. Gosh, Dad, you called me at like 8:30 in the morning. I was sleeping. Yeah, okay. So then I called her back on FaceTime. It was later than that. Because I was on the phone with Mom and them. So it probably about 1:30. So I called on FaceTime with all of us and everybody was telling her everybody was saying happy birthday. $29. She probably bought it back in the day from Apex when you can get them for $29. Matter of fact, I think you get it for $29 from Apex right now. I think they're doing 90% off.
It ended yesterday.
It ended yesterday?
Yeah, there's a 90% off going on for Easter.
Yeah. I thought it said the 11th. They said it was till the 11th, I thought. That's the
Okay.
That's the email I had got. And then knowing them, they be extending it. Look at that! What I tell you, I just opened up the website and it said it ends in 11 days. They just extended it. See that?
Wow.
Now, this right here, I ain't gonna hold you. Apex pissed me off with this. When they came out with their new products, right? They initially launched it. It was 85% off, right? It was 85% off. And you could get a 50K intraday trailing drawdown, and you could get it for like $19 with the 85% off. Right? It was like $19 and some change. Okay. Now that same account, right? That when that 85% went away, they didn't have no sale for about a week, and then they came back with a 90% off sale. I said, oh man, they killing it. It's going to be less than $19. They raised the price of it. They raised the price to $249. So now 90% off and you're paying more money. So they, you know what I'm saying? That means they like almost doubled the price. Because 85% off, you could get it for like, was it like $19? Whatever it was less than this. It was less than $20. And now you pay 90% off and it's $24. And also when they first came out, the performance fee for the intraday, it was $79. Now it's $99, right? And then for the end of day, right, it was $99. And see, like this one here, this right here was $29 for the end of day trailing drawdown and $99 for the performance fee. Now it's $119 and $34.99 with 90% off. So they raised the prices on everything and hit you with we got 90% off. I don't like when people do that, man. But they still my favorite out of and Tradeify is a close second. Apex is still my favorite, and trade. But now this is just my favorite out of everybody I've used. I've only got payouts from Apex, Tradeify, and My Fund of Futures. Them the only three that I've gotten payouts from. Right, Apex is my favorite because let me go full screen and explain why. Apex is my favorite because you get to keep 100% of your profits. Oh, now they've changed their layout. Now they've changed it. Like in the old plans, you could get like keep 100% of the profits up to like $12,000 per account. Now with the new plans, I think you can only get 6 payouts in each account, right? You get 6 payouts, and then if they want to take you to live, you know what I'm saying, you go to live. If they don't want to take you to live, you got to start back over, right? So if you get 6 payouts inside a funded account and they decide, hey, you don't trade good enough for us to take you to live, you got to start back over, right? You got to go back, do the eval again, get the PA again, and then go through the process. But if you get up to 6 payouts and they do want to take you to live, then, you know what I'm saying, you go to, so they done changed up their process where before, you know what I'm saying, you could just stay in that one PA forever, and once you go past $12,000, they start doing a 90-10 split with you. If they be like, nah, you don't trade good enough for us to put you live, but we'll take our 10% off of whatever you make. Now you can only get 6 payouts and either go live or start back over, right? I'm trying to find a home for prop firms. I just don't know which one to get. Apex my favorite because you get 100% of your payouts. You can have up to 20 accounts, right? But since they're so big, it takes longer for your money to hit your account when you request payouts, right? And I'm thinking that's just because they're so big. They got so many customers, right? I haven't done any requests from Apex recently because I've been kind of focusing on Tradeify because they payouts are lightning fast. Oh my God, lightning fast. And I was telling the gang how I've been going through a little situation where I lost my key to request payouts through Rise. So I'm still going through that. Matter of fact, I got an email today. I thought they was telling me it was finished. They was telling me, oh, we're going through the final stages. Even though this takes a few years, we appreciate your patience. Oh my God. So, you know what I'm saying? I ain't been able to, like, I request from Tradeify. I did my request. It don't matter. They sent the money to my Rise, but I just can't take it out because I lost my key. When I switched over my computer, I lost my key. So now, mind you, I mean, believe you me, my key is, I have it in hard copy and I got it in the computer. So yeah, Apex my favorite. Tradeify is a very close second, right? I've heard good things about other prop firms, but out of the 3 that I've gotten payouts from, Apex, Tradeify, My Fund of Futures, right? Now, if you want like the best bang for your buck, I have to be honest, right now, Tradeify is the best bang for your buck right now, based off of Apex pricing. All right, based off of Apex pricing, Tradeify is the best bang for your buck right now, because with the Apex pricing, like me, I don't mind intraday trail and drawdown. So I just go with the intraday trail and drawdown because I don't mind it. I'm used to it, right? And because that's the cheapest way. But even with the cheapest way, Tradeify is still cheaper for a 50K account, right? So even though you got to do a 90-10 split with Tradeify from the rip, right? It's still cheaper to go through Tradeify all-in costs. You see what I'm saying? All-in costs is what matter to me, right? How much am I going all? I don't care if I can get 20 accounts over here, right? I'd rather get 5 accounts over here that I pay less money for per account than to go over here and try to get 20 accounts just so I can say, oh, I got a big payout. No, let me come get these 5 accounts and get my, because you can only withdraw the same amount on both sides, right? Your first payout over here, you can withdraw 1,500. Your first payout over here, I think they changed. I can't remember all the rules. They've changed it, right? And then your second payout, you can request like 2,000. Then your third payout, you can request 2,500, right? It's like, but you're requesting the same amount over here in Apex. So Apex used to be the best bang for your buck. Before they switched over everything and raised the prices, they were the best bang for your buck. You can get it the cheapest. You can get all in on an Apex account when it was like 80-90% off. You could be like all in for like less than $90. It'll be like $80-something. You all in on a 50K, and the cheapest you could get it from Tradeify would be like $97, right? So now you getting it for Tradeify at $97, but you're paying like, you know what I'm saying, almost 120. No, it's over 120 because it's 24 plus 99. You paying like $125 for a 50K account over there at Apex, and that's cheap as you get it, unless they discount the activation fee, but they're not showing the discount. Before, when they had the other sale, they were showing you exactly how much you was going to pay. It was like the performance fee, they had $79 in there, and that's exactly what you was paying. So I can only assume that you're paying that $99. You see what I'm saying? So they had the discounted price for the eval and the exact price for the activation fee. So right now, Tradeify is the best bang for the buck. Apex is my favorite because you keep 100% and you can have up to 20 accounts, right? But my thing is, if you've never traded prop firms before, just buy one account. Buy one account, get your feet wet, take your payout when it's time. Don't try to stack it. Don't try to build it, because everybody got limits on how much you can withdraw per payout. Don't be one of the people like, oh, I'm going to run it up so I can take a big payout. No. Your first payout, it's capped. Your second payout, it's capped. Your third payout is capped. Even with Apex now, you only get 6 payouts in the you can't get to unlimited amount in the PA account no more. You only get 6 payouts, and either they say you good enough to go live or you got to start back over. So your payouts are capped. So whenever you hit, just like with Tradeify, with Tradeify, you got to get up to $3,000 in order to request a payout. You hit 3,000, you can request 1,500, right? You hit 3,000 the second time, you can request 2,000, right? Now, mind you, when you take out that 1,500, you're going to take 1,350. They going to take the rest, right? When you crest that 1,500, because they keeping 10%, right? That's only going to leave you with $1,500 in drawdown, right? You get back up to 3,000 again over the next 5 days. You can take out 2,000. That's only going to leave you with $1,000 in drawdown. You know what I'm saying? You get back up to 3,000 again over the next 5 days. You can take out 2,500. Now with Apex, you can't do that. Apex, you can only dig into your buffer by $500, right? You can only dig into your buffer by $500. So if you get to 3,000, right, and your buffer is 2,600, right? You get to 3,000, you can only request like 900. You can only request 900 because that's going to take you down to 2,100, and you can only dig into that buffer by this the thing that confused me here with your explaining. What's confused you? Like how much you can take out? What's confused you? How much you can take out? Yeah, do this. Click this link I'm putting up there and come up here and talk to me. Now, if you come up here, if you's a crank yanker and you come up here and let the bird out the cage, I'm going to be pissed. I'm going to be pissed. Click on that link right there that I just pinned to the top of the chat. and pull up and unmute and talk to me. Say when it comes to drawdown to the buffer stuff. Oh man, we gonna talk about it. That's simple mathematics, man. We gonna talk about it. Let me get my handy dandy calculator over here. Get my handy dandy calculator over here. All right. Where you at, RG Cutter? Oh man, RG Cutter ain't pull up, y'all. Oh well, we ain't talk about that. Oh, he said I'm signing in Zoom. Oh, okay. Boy, y'all know I got the attention of a squirrel. I was about to move on. Holding on. The up gone. Nah, all right. Yeah. RG Cutter, that's you?
Yeah, what's up? This is me. Let me close. Let me turn this TV down right quick. So, all right. So this is the thing that I don't understand. I know how to trade, right? Like I know how to trade, but I don't. These prop firms, like I don't understand when it comes down to the buffering. Like I just don't understand that stuff. That's all.
All right. Let's break it down real simple right here, right? So you got do you understand the end of day and intraday trailing drawdown, intraday trailing and end of day trailing? Do you understand that?
Now I need understanding of everything before I hop into that.
Okay, all right. So let's break it down here. So when you look at a prop firm, right, and they say like apex that you pick if you want end of day or intraday. So if you got one that say end of day, right, that means at the close of business, however much P&L, the highest P&L you made in the green at the close of business, that's what your drawdown is going to move to that day. So let's just say you start out with like a $2,000 max loss. That's the most you can lose in your account before you blow the account, right?
Okay.
Now mind you that like you buy a 50K account right here. You see it say max drawdown on the screen right there. Max drawdown is 2,000 and your profit target is 3,000. That means you're trying to make $3,000 before you lose 2,000, right?
Okay.
So no matter if you got end of day trailing drawdown or intraday trailing drawdown, if you're in a position that goes against you $2,000, the account is blown. No matter if you close the trade, like you ain't got to close the trade to lose the 2,000. Let's just say you going through a day, you having a bad day, and you take 3 trades where you lost $400 a trade, right? Times 3, right? That's $1,200. And then you get into a trade and that trade drop down $650. Whoop, your account blown. You know what I'm saying? Because your account, if you go under 2,000, if you go over 2,000 negative, it's gonna blow it. Even if you got end of day trailing drawdown, right? Because all you got is 2,000 to lose, right? It's sort of like a margin call. Like if you only got $2,000 in your account and you drop down lower than the amount that you need to keep that position open, they margin call you. Okay. Now when it comes to drawdown, okay, on an end of day trailing drawdown, all right, just say the first day you make $400, right? You make $400 on the first day, right? Let me move this up. This your, right? You make $400 on your first day, and at the end, like just say you make 800 one trade, you make 200 another trade, and then you lose 600. That's gonna leave you with 400, right? 8, 2, that's 1,000. Lose 6, that's 4, right? At the end of that day, your drawdown now, that's how much you got. You got 2,400 in drawdown because at the end of the day, you was up $400. All right. So then, let's say the next day, right? You come in and you lose $200, right? By the end of the day, you $200 in the negative, right? So now your drawdown is only 2,200. You see what I'm saying? Because you lost $200 at the end of the day, you was red 200. No matter if you was up 500, but at the end of the day you lose 200. Now it take 200 away from your drawdown. You see what I'm saying? So then the next day you only make $100. At the end of the day you only make 100. Now you got 2,300. You see what I'm saying? Now you got 2,300 over here. That's how your end of day drawdown work. It worked based off what happened at the end of the day. Now, the same account, right? You got $2,000 in drawdown, right? But for intraday, right? You come in and you're in a trade that gets up to $800 unrealized P&L, right? It get up to $800, but you don't close it. You be like, oh man, it's about to hit my target. I'm gonna let it ride, and then you move your stop to like $300 in profit, right? And it comes back against you and stops you out, right? Now you went up to 800, so that moved your drawdown up to 2,800, but then you closed it out at $300. So now your max, you know what I'm saying? Now your max peak was 2,800. So now, and then just say you close the day with only $300 up, right? You close the day with only $300 up. So now you got 5,300 in your account, right? Because you closed the day out 300 up, right? But when you look at it, right, your drawdown is now 2,800. So when you look at 50,800 minus 2,000, right? The lowest you can go is 4,880 because your highest peak was 800. You see what I'm saying? Your highest peak, you went up $800, right? So if you subtract your max loss away from your highest peak, right? Now, when you look at this right here, minus 48.8, you only got $1,500 in drawdown left because your max was 800 and you closed your trade, you ended your day only up $300. So now when you start off tomorrow, instead of having $2,000 in drawdown, right? Now you only got $1,500 in drawdown. And then on the other side, how I was telling you, you don't get more drawdown, right? I explained that a little bit wrong. But your max, you come back in at your max of 2,000. So let me go with the intraday. Do you understand what I'm saying for the intraday before I go back to that trailing?
So like, do the drawdown reset every day, or
that's what that's saying? I'm about to go back and explain it better see here, right over here, you went in profit $800 without closing out, and then you ended the day only $300 up. So
so they counted that as like, okay.
That's intraday trailing. You see what I'm saying? So for intraday trailing, because you went 800 in profit, right? They saying you actually had 50,800 at some point, right? Because you went 800 in profit. And since you closed at 50,300, they're saying you're $500 down. You know what I'm saying? Because at some point you was $800. That's for
Right.
intraday, right? That's for intraday.
Okay.
And for end of day, like we're gonna use the same numbers, right? For like this is intraday over here, right? This is our intraday. Okay. This was our highest point, and then we end up closing, and that's what we was left with at the end of the day, because this was our max. That's our threshold. Our threshold is 48.80, right? So now when we come over here, we got that same 50,000, right? This is for end of day. All right. I want to make sure I explain it right, because I messed it up the first time. Right. And then come here, open up another one. There you go. All right. So we got the same 50,000, right? We trade and we get up to 800, right? But we don't close it until, right? We get up to 800, right? We don't close it until we get and we close it at 500. I mean at 300, right? So we're gonna back off that 500, right? And at the end of the day, we end the day at 50,300, right? So 50,300 minus 2,000, because that's our max drawdown, is 48.3, right? It's 48. So the next day when we start, right? So we take 50,300, because that's what we got at the end of the day, right? And we subtract our lowest limit that we can go, because this is end of day trailing drawdown. At the end of the day, I have 50,300. Subtract 2,000 from that, they give me 48,300. So the next day when I start in the end of day account, I got $2,000 in drawdown that I can use, right? But with an intraday trailing drawdown, if I don't close every trade at the max that I was ever at, I'm going to have some type of discrepancy in my drawdown coming in the next day, right? So that's why with me, I don't let trades come against me once I start moving into profit. Like if I start to moving in profit, I'm only letting it come back like maybe $100, because I'm so used to intraday trailing drawdown, because I don't want to give back all that unrealized gains. But this stops doing this once you hit your buffer, right? You understand both of those? Then we about to move into the buffer now. You understand how both of them work?
Yeah, I understand it clearly now. I understand it.
Okay, now we're gonna move into the buffer. All right. So with every prop firm, right? Let me see. They don't have the buffer on here. Let me see if they got their buffer on here. Performance 7 day from 5 day, let's see, 20 accounts. Yes, end of day. They just got the consistency. You understand the do you understand the consistency rules?
Basically, like, I mean, being consistent, right?
All right, we'll talk about that too. Okay,
All right.
so all right, so your buffers, everybody got a buffer, right? So for Apex and a lot of the other firms, the buffer for a 50K account is typically $100 over your max drawdown, right? So your max drawdown is 2,000. All right. So your max drawdown is 2,000. So I'm gonna write this over here, right? So we talk about the buffer, right? We talk about the buffer. All right. So your max drawdown is 2,000, right? That's your max drawdown. Now your buffer, right? Your buffer is usually $100 over your max drawdown, right? So that give you 2,100, right? So that's your buffer. All right. So we come over here and we say our buffer is 2,100. So how this works is when you're trading, and this don't matter if it's end of day or trailing. It don't matter if it's end of day or trailing. Your buffer is 2,100, because your max drawdown for this account is 2,000, right? So whatever your max drawdown is, add $100 to it. Okay, like if you got one that's a max drawdown of 6,000, it's 6,100. 1,500, it's 1,600. You just add $100 to whatever your max drawdown is. All right. So when you're trading in your account and you have so many days, right? This right here says say 5 trading days, right? They have a consistency rule. We're gonna talk about all that stuff, and they have like a minimum amount for each day. All right. So we're gonna talk about right now. We just talk about the buffer and the trading days. So if in 5 trading days, right, you make it to $2,100, right? You are qualified to take a payout of, I think, with Apex, you're qualified to take a payout of $500. You know what I'm saying? Because you can dig into your buffer with Apex, $500. Now, I will have to double check to see if it's still the same, because I know before you had your buffer, but you still had to get to 3,000 to get a payout. And I think that's how it still is. Don't quote me on like how it is, but so we just gonna go with like the 3,000. All right, so 2,100 is your buffer, right? 3,000 is the target. Let's just say they say you can't take nothing out into 3,000. All right, so within 5 days, right, you make it to, or let's just say in 4 days, you make it to $2,100. All right. So you make it to $2,100 in 4 days. So you still need a trading day, right? Because you need at least 5 days before you can request a payout. And let me go here so I can get the exact numbers. I don't want y'all know I hate guessing on stuff. So I want to give you the exact numbers of what you need if you inside there. Let me stop sharing my screen.
I got a quick question.
Yeah, go ahead.
Is it 5 consistent days or
no, just 5 trading days? And that's what I was gonna say. That's what I was gonna tell you. They got different route. That's why I say it's a certain amount you got to make to qualify as a trading day, right? It's got, and that's why I'm coming to get like the information so that you can see that, so you can see the real numbers. Like I understand it, so it's like it's easy for me to, but I want to give you the real numbers. Let me see.
How you explaining? I'm understanding it now, because that just was like, that's really why I ain't really getting to it, because I really didn't understand that.
Yeah,
you know what I'm saying. So
I feel you. Is this sit inside here? They used to have a little chart to make it easy. To see. Set rules. 50,20. Okay, 25, and they got it, and it's 2,500. Okay, so it's 20. Oh yeah, that's what it 2,500. All right, so it's 2,500, not 2,000. I'm glad I came in here and looked. All right, here we go. So let me share my screen again. See, that's why I like to get the real numbers so people can know exactly what they got to do. All right, so boom. Right, we're gonna change this to 25. So it's 2,500 is the buffer. So it's $100 over 25. So it's 2,600. Right, it's 2,600 is your buffer. Right. Right, so that's your buffer there. All right, so you got the trade right here. And this talk about trailing drawdown. So trailing drawdown, right? It's 2,500. 2,500 plus 100, right? That's your buffer, right? Once you hit that buffer, right? Now you're qualified to take that's, you know, where I get the 2,100 from, because that's the lowest you can go. That's why 2,100 was stuck in my head. If you get 2,600, now you're qualified to take a $500 payment, because you can't you can't dig into this buffer more than $500. That's where I get that 2,100 from. All right. So, and your this is for your end of day buffer. Same thing. All right. This right here, they got a 30% negative PL rule, right? P&L rule. This means on one trade, that one trade can't go into the red more than 30% of whatever your P&L is, right? Whatever your P&L. So if your P&L, right? If you got $3,000, that's high as your P&L is, right? That's because that's above what your buffer is. Just say your whole P&L is 3,000, right? If you're in a trade that goes $900 against you, you're breaking this 30% negative P&L rule. You can't hold a trade that's going to go against you more than 30% of your P&L because they say you're risking too much. You're risking too much on one trade. So so you got to make sure you're sizing appropriately so that you're not risking, you're not trying to get home runs, right? That's what that 30% negative P&L rule is, right? So whatever your P&L is, you can't never let a trade go against you more than 30% of whatever your P&L rule is. You understand that right there? That makes sense?
Yeah, I understand.
Okay. All right. So let's talk about, let me see. Limit on, that's the 30%. I'm trying to find the right I'm trying to find the that's 30%, still talking about that. Right? The risk to reward, like they give you a crazy risk to reward. They give you like 5-to-1. That mean like they saying you can risk up to $5 for every dollar you make. That's crazy. That's like, it's a negative risk to reward. So it's like you could they let you risk like negative risk to reward. So that's crazy to me. But if you risk like over 5-to-1, like if you're trading, and when you're trading, just say if you're using a stop loss of 30 points every trade, but you only making 5 points on your trades, you're breaking a rule. You're risking too much. You got your risk to reward is outside of there, because that'll be like 6-to-1 instead of 5-to-1. You're risking too much. I'm trying to find the okay, payout. Let me see, payouts. Okay, consistency, right? This is consistency, right? So max contracts, that's simple. They got scaling now, where you don't, when in the eval you get access to up to 6 contracts, but when you get into the PA, you start out with like either 1 or 2 contracts, and as you grow, you can scale up to a max of 4, but you got to keep growing your P&L. That's the scale, and that's pretty self-explanatory. They don't want you dollar cost average. They don't want you to just keep adding to a losing position, meaning it's running against you, and you get down 15 points and you add a contract just to bring your average cost down and try to dig your way out of a hole. They don't want you doing that. Now you can DCA within reason. Like if you set your stop loss within reason and it come back and you want to add to it, there's nothing wrong with adding to it if it's going against you, but they don't want you digging your way out of a hole by always running against me. I'm just going to add another contract to try to get up out of there. All right.
Let me ask you a question. So I can add to a position if it's going the right way, though, right?
Yeah, you can add all you want if it's going the right way. But what they don't want you doing, right? Let's just say if you it's trading, you get in on this pullback right here, right? And it start going in your favor like this, and then it start dropping against you, and it get all the way down here, and then you add again here to bring your average to there, and then you come and get out right there. That's
I understand.
Yeah, that's what they saying, no DCA in. But if you like, even here, you get in there, right, and then it go up and it come back against you a little bit, you can add right here. Just say if your stop loss is there, you can add there. They just don't want you trying to dig your way out of a hole when it's running against you. You see what I'm saying? Right. But if you come in and get in here, then it pull back, you can add there, you can add there. You know what I'm saying? You can add as much as you want if it's going in your direction, right? Right. Okay. And then I'm trying to find the okay, safety net. This is your buffer right here. They call it the safety net, right? So this right here, it say it apply on the first 3 payouts, right? So for the first 3 payouts, right, you got to be like above your safety net, right? As payouts safety net required. First 3 pay as of the 4th, the safety net ain't no longer required. All right. So they saying after the 4th payout, the safety net ain't no longer required, but you got to know, you know what I'm saying, how much you're taking out and how much you got left. The safety net is there so that they can ensure that you got some drawdown to play with when you withdraw. You see what I'm saying? So you got a minimum payout of 500, right? Payouts above 500, you got to have the balance above the safety net to be able to do it, right? So your safety net is 2100, right? That's the lowest you can go. That's your safety net. So you got to get above 20, you got to get at least 26 to be able to request 500, right? If you want to request 1,000, you got to have 53, you got to have 53.1 in there, right? Because see, they say additional 700 need to be, if you want to request 1,200, you got to have an additional 700, meaning you got to have 53.3, right? So just using their numbers, right? Your safety net is, I mean, your buffer is 2,600 because you got to get 2,500 plus 100. Your buffer is 2,500, 25 plus 1. That's your buffer. And then your safety net is 2,100. You can't go no lower than 2,100 on your first 3 payouts, right? So if you want to withdraw, right? Let me see. They used to have a table that show you the max you can withdraw. Let me see. Because I want to work with their real numbers. Because they just showing you for 1,200. They were just showing for 1,200. Right. But you get it, right? So if you just say if the max you can withdraw on your first payout is 1,500, right? If you want to withdraw that max, right? Right? So if you can take 500 out of here, that means you need at least another 1,000 above that. So your P&L will have to be, you would have, your total in your account would have to be 53,600, right? Your P&L would have to be 3,600 in order to take 1,500 out on your first payout, because you can, your safety net is 2,100. You cannot dig into your buffer more than $500 with Apex.
I understand that. I understand.
Okay. And then with Tradeify, right? With Tradeify, your buffer is 3,000, right? You have to get 3,000 in order to qualify for a payout, right? On your first payout, the max you can request is 1,500, right? So when you hit 3,000, you can request 1,500. Now, mind you, when you request that 1,500, right, they gonna keep 10%. So 1,500 times 0.9, right? You're going to get 1,350. They're going to send that to your Rise account. A lot of times it hits your Rise account in like 4 hours, right? And then once you request it from Rise usually put it in your bank like the next day, right? So you can request 1,500 out of this right here, right? So you take out that 1,500. That's only when you start the next day after you make that request, you only got $1,500 in drawdown. You see what I'm saying? Because you made $3,000. You follow what I'm saying? Like when you, let's come here. So you got 50,000 when you start out, right? The max you can lose is 2,000. You get all the way within, you know what I'm saying, 5 days or however many days you went through, right? You got up to 53,000. You got 3,000, right? You take away that That's what we'll talk about the buffer. We'll talk about the buffer. I'm gonna do that in a second. So, but just on the payout, you can request 1,500 when you hit 2,000. I mean, hit 3,000. But if in order to request the 1,500 at Apex, you got to be at 3,600 because you can only dig into your buffer by 500. Tradeify, they let you dig into your buffer as much as you want to. Right, you can dig into it as much as you want to, up to the max that you can withdraw. Right now, your drawdown, your trailing drawdown, right? You clear on like how you the withdrawal, how you can take it out, the buffer.
I'm clear on. Yeah, I'm. You made everything come together for me, so I really appreciate that.
Now with your drawdown, right? Once you hit 2,600. Right? Once you hit 2,600, your trailing drawdown stops for both of them. For Tradeify and Tradeify, I think it's 2,500, maybe 2,600. But once you hit like 2,500 with both of them, that's when your that's when your drawdown stops. So, once you hit 2,600, so your account, right, you're at 52,600, right? And you still need 2 trading days to trade, right? When you come in, right, today with Apex, end of day trailing drawdown, intraday trailing drawdown, Tradeify only got end of day trailing drawdown. Once you meet your buffer of 52.6, right? And then whatever the buffer is over there for Tradeify, I can't think of it off the top of my head. I think it's like 52.6 or 52.5, whatever it is. Once you meet this buffer, right, you traded 3 days and you up to 52.6. When you come in on day 4, right, when you come in on day 4, you can come in, get out of the way. You can come in on day 4 and you open up a trade and your trade goes up to $1,000, right? Your trade go up to $1,000. End of day or trailing, don't matter. It come back and it closes you out at $500, right? Now your buffer, right? Now your buffer is 3,100 because now that trailing don't follow you no more. Now you're just stacking on top of that buffer. No matter, like at the end of the day, however much money you made, that's how much it's gonna add on top of that 2,600 as far as your drawdown. Right now, your drawdown is getting bigger and bigger and bigger. Right, so now instead of having 2,600 in drawdown, now you closed it out with 500 that day. Now you got 3,100 in drawdown. Right, the next day you make $200. Right now, you got 3,300 in drawdown. You see what I'm saying? So like your drawdown is getting bigger and bigger and bigger once you hit that buffer. It don't follow you no more. It don't trail no more. It don't get high. It don't let me see if I can explain it, right? So if you got 3,300, right? You got 3,300 in drawdown, right? So that mean your totaling your account is 53,300, right? Minus 2,000, right? The lowest your account can go is 51,300. You see, I mean, I'm tripping. Ignore what I just said, right? So 52.6 minus 2,000, right? The lowest your account can go is 50,000. No, 50,600. Let me see, 50,000 plus 2,600.
So basically, like as you make the money, the drawdown goes up, right? Something like that.
This what I'm saying. Like here, once you hit your buffer is 2,600, right? So
right.
When you get to 52,600, right, minus 2,000, right, your account can never go any lower than this right here. So
right.
If you get 3,300 in your account, like once you get to that 50, right? So 52,600. Once you get here, right, and you start making money, the lowest your account is can go is here. So when you just say you get up to 53,100, right?
Mm-hmm.
Now 53,100 minus 50,600. Now you got $2,500 in drawdown instead of 2,000. You
Right,
see what
I
I'm
see what
saying?
you're saying.
Yeah.
Yeah.
And when you get, and if you get up to 54,000 and you still haven't taken a payout, you get up to
It's gonna keep going
54,000,
up.
right? Now you got 3,400 in drawdown.
Right.
And so it keep it. But what I be telling people is, don't try to stack it up. Don't try to build your buffer saying, oh, I'm gonna take out a big payout, because every payout has a limit on what you can take out. There's a limit on it. Start at 1,500, and I think it might max out at like 3,000 or 3,500. Right, so you don't never, like me, you don't never want to make this buffer, you don't never want to make that buffer or your P&L larger than what you can actually take. You see what I'm saying? You don't, unless you saying, okay, I'm gonna want to trade live with them, so I'm trying to make it as big as I can. So when I go live, I got more money to start with in my live account. Because once if they decide, oh, you trade good and I want to switch you to a live, they take your P&L, and that's what you start your account with. So if you got like $15,000 P&L, they start your live account off with $15,000. Whatever your P&L is left in your PA account. You see what I'm saying? But so that but it don't make sense to me to raise this buffer up, because ain't no guarantee that, you know what I'm saying, you ain't gonna blow the account. Ain't no guarantee. Take your money. Your money on the table, you take your money. You see what I'm saying?
Right. So look, I got one more question. So when it comes down to like the trading styles, like what I mean is, like, you know, they got people that scalps, they got people that swings. Can you do swings, or no? It's only like just day trading, right?
Yeah, you can't do swings because you can't hold no position overnight. Because
All right, cool. All right, okay.
Yeah, with most prop firms, as far as I know, with most prop firms, it's only gonna be for like futures or some. They have some that do crypto. I don't know like what the rules are in crypto. I don't know if you can hold it overnight or not. Forex, I think Forex you can hold overnight in Forex, but I've never traded Forex. But for like Apex, you can only do futures, right? So you can't hold overnight. All your positions got to be closed that day. Right, and
cool.
And you can't trade like stocks and stuff on. You can only trade futures with Apex. You can only trade futures with Tradeify. Most of the futures prop firms, you can only trade futures with them. And and it's like they got you can't trade against yourself, meaning you can't go short in one account and long in another. And I was trying to find the thing where they tell you how much you like per day. With like the 50K account, I think you got to make $250 for it to count as a I can't remember the exact amount, but back in the day it was like, I got to look at the new rules. Back in the day you had to trade for 8 days, and each day you had to make at least $50 for 5 of them days, right? So over 5 days, it had to be making at least $50, all right, and trade for 8 days. And then if you was above the amount, then you qualify for a payout. But now it's only 5 days, and I think it's at least $250 a day, right, in order to qualify for a payout. But you got to be above the buffer. So that lets you know, you know what I'm saying, if you're trying to get paid out in 5 days, you got to be making more than $250. Because if you want to get a payout, 2,600 divided by 5, you got to make at least $520 a day to do it in 5 trading days. And they don't have to be consecutive. You ain't got to be like Monday, Tuesday, Wednesday, Thursday. You can trade on Monday, come back, trade on Wednesday, come back, trade next Tuesday. That's 3 days. You know what I'm saying? It's 5 trading days of $250 or more, right? and
Okay.
then you qualify for a payout if you're above that. If you got 2,600 or more, you qualify for a payout, right?
Right. Well, for me, for me, the way I trade, that should be real easy than going into these prop firms then, because I'm very surgical when it come down on my interest.
Yeah.
Like I'm real picky, for real, for real.
Mm-hmm.
But well, I bet.
Yeah, and the thing, because I used to be like anti-prop firm, but I never did no research on them. And then once I started researching them, I'm like, oh man, this like free money pretty much.
Right,
Like,
right.
you know what I'm saying? I'm like, this free money. You see what I'm saying? So I tell anybody, if you know how to trade, work the prop firms, get your money, you know what I'm saying? And then, invest that money or just put that money in your own account and keep flipping it. You know what I'm saying?
So let me ask you one more question. So you say Tradeify, because I just looked on Tradeify website. So I think I'm gonna do Tradeify instead of Apex because I've been hearing a lot of negative. I mean, I don't go over what people say, but I don't want to do Apex. I think I'm gonna go with Tradeify first.
Like right now, Tradeify is the best bang for your buck, right? This the best bang for your buck right now. Cause with Tradeify, if you're looking at a 50K growth, right? 50K growth, this is like the this is the one I do right here. So for a 50K growth, right? You can get it for right now they got a 40% off sale. So you can get it for like $87 and some change. Right? It's gonna be like $87 and some change, cause for a 50K growth, it's $145, and then it take 145 minus what did I say 40% minus 40% $87 even, right? So it's $87 even right now for a 50K growth eval, right? And over at Apex, right, you're gonna pay for a 50K end of day trailing if you're trying to get the same thing, because this is end of day trailing. So if you're trying to get an end of day trailing drawdown, you're going to pay $34.90 and then $119 for the setup. If you say the intraday don't bother me, you're going to pay $24.90 and then $99 for the setup. So that's still, both times, that's still more than $87. That's why I say right now, Tradeify is the best bang for your buck. You see what I'm saying? And you can have up to 5 accounts with Tradeify. And Tradeify, they got a 35% consistency rule. Oh, I didn't talk about the consistency, right? So Apex, I think they changed their consistency on the new plans to like 50%. I'm not sure. Don't quote me on it, but you say you ain't going with them anyways. But Tradeify is a 35% consistency rule. So that means like one of your trading day profits can't be larger than 35% of your total P&L, right? So let's just say if over 5 days you make $3,500, right? That's gonna put you in the place where you can take that $1,500 withdrawal, because all you need is $3,000 to request that $1,500, right? So just say if you got $3,500 in P&L, one of those 5 days, like just say if you do it over 5 days, if you do it over 8 days, I don't care how many days you do it in to get this P&L, right? If you multiply that P&L, 3,500, Jesus Christ, 3,500 times 0.3, 1 day your P&L on 1 day can't be higher than 1050. If your P&L is higher than 1050 on 1 day and your total P&L is 3,500, right? Just say if you got 1 day that's $1,100 and your total P&L is 3,500, you won't be within the consistency to request your payout, because 1 day is higher than 35. I put 30. I put 30. It's supposed to be 35%.
So basically, you gotta watch how much you make real quick. Like you gotta watch how much you really make on this one.
You don't have with all of them. You don't have to watch how much. I hate to put it in terms of you got to watch how much you make, but yeah, you got to watch how much you make. But I hate to put it in terms of that, because if you got a let's just say you got a strategy where you are consistent with how you trade, right? All you got to do is make sure, like, you can come in and make like $2,000 a day if you want to, but you just got to know that if you make $2,000 in a day, right, that means you got to be, I don't like that number, so I'm gonna pick 2,500, right? Divided by 30%, that means your P&L got to be 8,300 before 8,333 before you gonna meet your consistency, because you made $2,500 in one day. You see what I'm saying? So, and that's why I tell people, whatever the minimum is for you to get a payout, right? If the minimum is $3,000 for you to be able to request $1,500, you take $3,000, right? You divide it by the days that you plan on getting in. In this case, we're gonna go with 5. Boom, right there. If you hit $600 a day for 5 days, you can request your $1,500. Right?
I was thinking, right? Okay, my numbers. As you was doing that, I was doing my own numbers too. I'm like, okay, so I should be coming in doing like at least $300 to $400. You put 6 up there, so I'm like, all right, I got it. Okay,
yeah, right.
All
And
right.
if you want to like take it easy, you be like, okay, I'm gonna do it. I'm gonna take my time. I ain't gotta rush. I just want to do it so that every 2 weeks I can request a payout. You know what I'm saying? Because your first payout, you can request $1,500, right? So you'd be like, okay, I got to get to 3,000 in order to request this $1,500, right? So you say, okay, 3,000. All right, I'm gonna divide it by 7, because I'm gonna give myself time. I'm gonna trade. I'm gonna give myself over these 5 days, and over the next 5 days, I'm gonna try to get it with. I'm gonna have to try to trade 7 days over the next 10 days. You know, like, because you got 5 days in the week, right? That means if I make $450 a day or $430 a day, I'll be able to request my $1,500 after these 7 days. But you only need 5 to, because if you get, let's just say if you only doing like, let me see, let's do 430, right? Times 4, right? And then that's like 1,700. Let me see here. Let's do this first. 3,000 times 0.35, right? So 1050 is your biggest day, right? So let's just say over 4 days you get $2,000 over 4 days, right? Divided by 4, you hit $500 a day, right? You hit $500 a day over 4 days, and you got $2,000, right? On that 5th day, if you catch a lick and make $1,000, guess what? You're still within consistency. And so now you done traded 5 days, right? Plus 1,000. You done traded 5 days. Now they're gonna be like, you can request. You're gonna see the button pop up, request a payout, because you're still within the consistency. Because $3,000, 30% of $3,000 is 35% of $3,000 is 1050, and your biggest day is $1,000 based off the scenario we just gave. So you can request your 1,500. You see what I'm saying? And then your next payout, let's just say your next payout is $2,000, right? So you got that minus, you took your 1,500 out, right? 3,000 minus 1,500, right? So now you got $1,500 left in the account, right? You want to take a $2,000 payout next time, right? If you get back to 3,000, it's gonna say you can request 2,000, but you can be like, okay, I don't want to take it. I don't want to take my drawdown all the way down to 1,000. So over the next 5 days, I'm gonna try to make the $2,000 that I want to take out, because I don't want my buffer to go no less than 1,500. So 2,000, you go 2,000 divided by 5. All you got to do is make $400 a day over the next 5 days. Not saying you ain't got to take no losing trades, but if you can come out at the end of the day $400 in the green over the next 5 days, right? Plus 2,000, right? Now you got 3,500. You can request your $2,000 right? And then when you come back in, you got $1,500 in drawdown again, but you done took your $2,000 out. You see what I'm saying?
Mm-hmm. I see.
Right? And even if you just get back to 3,000, it's gonna be like request a payout. You can request up to, cause that's what I did when I first started trading with them. I got to 3,000. I request 1,500. Right? I got back up to like 3,100. I requested 2,000. You see what I'm saying? I got up to like 3,200. I request 2,500. Right? It's like soon as I hit it, give me my money. I don't care if I blow it the next day. Just give me my money. You know what I'm saying? But yeah, that those are the main things there. Your consistency rule, your drawdown, your required days. Those the main things you got. Them the only things you really got to worry about with Tradeify. And then Apex, the only extra thing you got to worry about with them is the 30% thing. And because I got caught in that before with the 30% thing, because like I had scaled into some and I like added, I scaled in, and then it pulled back down into the negative after I had scaled in, so that made the P&L, the negative P&L, go above the amount that it should have gone. You see what I'm saying? So when I went to go to request the payout, they was like, hey, you broke this rule. But now they done changed all that, where if you make it to a payout in Apex now, they ain't gonna deny you, because they got everything that's automated that lets you know as soon as you break a rule. If you break a rule today, they email you that day and be like, you broke this rule and you can't request none of this money you done made until you trade enough to not break a rule. You know what I'm saying? It's like, so it is, some people might see it as a little bit stricter, but you won't never get a denial if you make it to the point where you can see that request a payout button on Apex, because they're not going to put it there until you don't break no rule during the trading. And if the more rules you break, you're making it harder on yourself, because you got to keep trading and trading. Your P&L is getting bigger and bigger and bigger and bigger, because if you just say, if you trade, you get like $1,200 in your account, and then you break a rule, right? You can't request none of that 1,200 until you request a full payout. So that means now that $1,200 you got to pretty much start over again, right? So just say if you get your P&L up to 1,200, so you got 51. This is what you got in your account now, right? So now you got to request 1,500, and remember, to request 1,500, right? You had to get let me see, 52.6, right? Plus 1,000, right? In order to request the 1,500, right? So now you got to put this 3,600 on top of this, right? So now plus 3,600. Now you can request 1,500, because you can't touch that 1,200 until you get a full payout, because you broke a rule. You see what I'm saying? And so now when you take away that 1,500, right? Now you got 52.3 left in there, right? So now you got 52.3 left in there, and let's just say they said the minimum days, it's like 250 a day, right? So for the next 5 days, 5 plus 250, right? 5 times 250, right? So now all you got to do is make $1,200, because you're already over the buffer. You see what I'm saying? Now you don't have to make 2,600. You ain't got to make 3,000. Now all you got to do is trade the minimum amount for 5 days, right? And so now plus 1,250, right? Now you got 50. Now you can go in and request 2,000. I think the second payout is 2,000. If the second payout is 2,000, now you can request 2,000. Even though you only made 1,250, right? That means you're requesting some of that 1,200 from before, right? But since you took a full payout, now you can request that money that was in jail because you broke a rule. You see what I'm saying? So that's another thing you just got to remember when you're trading with Apex. If they deny you, or if they say you break a rule, you got to pretty much start over in the sense of from that day forward, only request based off the money from that day forward what you was, and they tell you the date you broke the rule. So from whatever date that is, that next day forward, that's the only money you want to try to withdraw out of, or they gonna deny you. You see what I'm saying? They'll deny you if you try to withdraw out of that money where you broke a rule. But
I
yeah,
appreciate it, bros. I understand. I really understand now. I'm
yeah.
about to go get one and see, just see what I can do with it. That's all.
Yeah, man. Do your thing. As long as you know how to trade, man, you can, man, that's easy money, man. All right, man. Good talking to you, man. I appreciate you for pulling up. Now, we're going to go ahead and look at this price action real quick, because we ain't looked at no price. Everybody like, man, when we going to get to the price action? Y'all shut up.
My bad, y'all. My bad.
Oh, man. Man, they know how I do, man. Question. The people's questions come before anything. Well, no, my family time come before anything. But the people's question that outweigh all that looking at what price did. Cause we look at price every single day, and we look at price every day. You feel me? All right, man. So this week we're gonna go to the daily chart. All right, we're gonna go to our daily chart. And this is our new week opening gap down here, the purple box right there. Right? For those who don't know what the new week opening gap is, that's the difference between the closing price on Friday, the futures closing price on Friday, to the futures opening price on Sunday. Right? And then a new day opening gaps, these other little gray boxes, these thin ones in this big gray one here. It's the same thing, but it's from day to day. It's the futures close on Monday to the open on Tuesday to Wednesday, and when you go from Friday to Monday, which is Sunday night, that's where you get the new week opening gap. All right, so this right here, it tells us right where we closed at on Friday and opened on Sunday. Right, at a quick glance, we can quickly see. Right, this is a close and this is a open, because this is a bearish new week opening gap. Right, it does more than just tell us that. Man, I done started already. I ain't even hit the record over there. Anyway, boop. Just in case I want to do some gems from the live stream. Right. So we opened up here on the week. Right. You see, we dropped down and rallied up, taking out that buy side. We spoke about these PD arrays that we have been watching. Right. We spoke about. Did I delete them again? I think I did. All right, let's hide that for a second. Now, I'm just going to use the Fibonacci tool, right? Come here, put it in the 8th grade. So we talked about this bearish fair value gap there, right? For those who can't see it, this is the bearish fair value gap there, right? Now, when we look at, is there a gap? There's no gap there. So we got this volume imbalance down there, right? And so if we come here, right, since this wick exceeds 50% of this, and if I include that imbalance, right, then we just mark it at the high, right? If that wick didn't exceed 50% of it, then we would include the volume imbalance also. All right. So we got that bearish fair value gap. We said that it was created in the discount of our move, right? It was created in the discount of our move. This is like, we just keep extending this range, right? It's created in a discount, so we were anticipating it to become an inversion, right? Because it was the first SIBI leaving this range, right? And we see we traded up and closed above it, creating that inversion fair value gap, right? We also pointed out this bearish fair value gap right here from the 26th of March, if I can get on this right tool, right? This bearish fair value gap from the 26th of March, right? And we'll put some octants on that too, right? And we talked about if we close above consequent encroachment of this, that will be showing weakness of the PD array and strength of price. All right. We said we were in between the tale of two cities because we had an inversion fair value gap here, because this is where we started our week, right? We had an inversion fair value gap here, okay? And we had closed above consequent encroachment of this bearish fair value gap, right? And we were defending the lower half. If you notice here, after we closed above consequent encroachment, which is the red line in the middle. Let me thicken this up for y'all because I keep forgetting that it don't show up really, right? So let's thicken up these octant levels so that we can see them better, right? So the red dotted line in the middle, that's your consequent encroachment, right? Once we closed above the consequent encroachment, we said that we noticed that we were defending the lower half of this SIBI right here. That was showing strength in price because the algorithm was not showing a willingness to close back below that consequent encroachment. All right. Then we started our week off, right? We started our week, traded down to the low of it, immediately traded up, taking out that high, right? And still closing above consequent encroachment of that SIBI. Now we've created an inversion fair value gap. Tim, why are you calling both of them inversions? I'm glad you asked that question, little Timmy Rogers. This is the first SIBI created after leaving this balanced price range and trading down into that liquidity. And this right here is the first SIBI in this entire move down. So yes, this is a first and this is a first. And whenever you have the first imbalance, right, of leaving a range, if you trade back to the opposite side of it and get a closure, you're anticipating that to act as an inversion, if that being an inversion supports the narrative of what price is doing. And we said that when we came back up here and was defending the lower half of that, we were anticipating that raid of liquidity to be our smart money reversal. And if that's our smart money reversal, that puts us on the right side of a market maker buy model, and we will be looking for buy side liquidity as the draw. Okay, so once we closed above here on Monday, right, we closed up, this is Monday, we closed above the SIBI from the 26th. That right there gave us that inversion. So now that we're above it, we're anticipating it to act as support, right? So on Tuesday, we dropped down, right? Taking out Monday's low, okay? And if you're, excuse me, if you're bullish, what do you want to see? You want to see price manipulate some type of sell side, right? So we come down, we take out Monday's low, and then we come back up and close not only above consequent encroachment, which is showing bullish strength, and you, since you're looking for it to be used as a bullish PD array, you want to see this support price. So you see the discount sensitivity with the rejection, and we close up here creating relative equal highs. So we're still in the narrative of we're on the right side of a market maker buy model, right? We come out here on Wednesday, right? We got a bullish gap up. We trade back down. Don't show any desire to get back down into this wick because now we've traded above, right? We're respecting the inversion fair value gap, right? And we trade back down. What's the closest imbalance? That wick right there. Don't even show a desire to trade into that wick. And then we rally up. And did we get that high? Let's see if we got that high. Yes, took out that high from the 18th, right? So we took out that, we rallied up and took out that high right there. Once we rallied up and took out that high there, now what have we done, right? We have created another BISI, right? We created another BISI. So what do we have here? Down there in the V shape, what do we say about the V shape? When you come into the liquidity and immediately come back up, what do we have down here? Trap traders, right? You got trap traders down there. And what did the algorithm not do right here? Did not try to go down. So you got the trap traders and we take off. Boom. Price rallies up. And what does it do? It's cutting through this like butter. right? Tim, what do you mean? Right? We got efficient delivery in this area right here, and then we leave it. Once you have efficient delivery of buy side and sell side, and then you leave it, that leaving it creates what? A balanced price range, right? If you got a balanced price range and you're below it, if you're in a market maker buy model, if you're bullish, if you're on the right side of a market maker buy model and you're below that balanced price range, you want to see price cut through it like butter, just slice right through it with no resistance. If you're below a balanced price range and you're bearish, you want to see it act as resistance, hit it, and you want to see that premium sensitivity and send it back down. In this case here, right, we're on the right side of a market buy model. We're respecting bullish order flow that we've been talking through day by day. When we get here, right, we've got our trap traders down here, right? The algorithm doesn't show any signs of wanting to go back down in there, and we start to slice through all of this right here like butter. We're just cutting through it, right? This is our balanced price range. We open up the next day. Don't even try to trade all the way down. We trade back down into the first candle of this bullish order block, right? Also, this bullish order block here, what is that right there? That's a change in the state of delivery right there. Why? Because you got an order block there, right? This order block, when we came here, right, we came down, right, we have down here, right, when we traded above these order blocks here, well, that was a change in the state of delivery for down here, showing these trap traders, right? That was our change in the state of delivery there. You notice price traded down into that change in state of delivery and took off, right? Now, price, ignore all this right here, right? We're coming down there, trap traders. Now we're coming back up above the order block, change in the state of delivery right there. Price closed, opened up the next day, dropped down into that order block, right? Didn't dig down into it, just barely came into the change of state of delivery, right? Traded down into this bearish breaker right there. I mean, bullish breaker right there, right? Got a high, low, and a higher high right there. Bullish breaker, change in state of delivery, moving back up, right? Price move, just continuing up. Why? We're at this balanced price range and we're moving above it. So now you want to see it act as support. Trade down until you change the state of delivery, bullish breaker, moving up, right? The next day, right, what do? We traded above, right? When we came here, we traded above that high right there. That gave us a bullish breaking market structure there, right? Got a bullish breaking market structure there, right? We're above this balanced price range, right? When we opened up there, what did price do, right? We traded back down into that market structure break there, traded down into that market structure break. Where's your closest imbalance? This wick right here, that long wick right there, traded down. Let's see how far we went down into that imbalance, right? Came down to the upper quadrant of that imbalance. For those who can't see it well, right, we blow that up. We trade down into the upper quadrant of your imbalance right there, right? When you're bullish, where are your best longs going to come from? The premium of a discount PD array. Where's your discount PD array? That long wick right there. Tim, why you not looking at that candle? Because the wick is the imbalance, right? The wick is the imbalance that we made at this breaking market structure. When you're bullish, your best longs are going to come in the premium of your discount PD array, right? Tim, you ain't making no sense. You talk about buying in a premium. I'm talking about buying in the premium of a discount PD array. Right, so if I put this into quadrants so that it ain't so overbearing, right, we're coming back down into a market structure shift or breaking market structure. You're looking for that to act as support, right? We're coming back down into our discount PD array, this premium wick, right? We touch a bus stop. What do we do at the bus stops, right? Whenever we mark something out, whenever we mark out an algorithmic range, where we look for trading opportunities? At the bus stops, right? If you're bullish, And where's the best trading opportunity going to come? Y'all can't really see that wick. Where's the best trading opportunity going to come from? In the premium, right? Anything above 50%, at a bus stop right there. Trade down into that bus stop and price continues up, right? Price continues up. It wasn't like looking at the daily charts. It looked like, oh yeah, it was so simple. Each one of these days, it wasn't very pretty, but if you was patient, there was opportunities to make money. And when I tell you, ain't no such thing as an algorithm. Hey, if you believe that, I got some oceanfront property at the North Pole I want to sell you.
Let him cook! I said let him cook!
Man, y'all do me a favor, hit a like for the algorithm, man, and subscribe to the channel if you ain't subscribed. Anybody got any questions for me before we drop down to the intraday time frames? Anybody confused on anything that we said? Anybody? All right, man. All right, ain't nobody confused, so I guess we'll keep moving on. All right, we'll drop down to a 60-minute time frame. All right, and we'll look at it on a 60-minute time frame. We're just gonna start out with the week. We ain't gonna go back in time, right? And if we now early in the week, let's do this real quick. Let's go to 15 minutes because early in the week we were paying attention to some PD arrays that people typically don't pay attention to. What day was that when we was looking opening range? Opening range gap from the 8th. Opening range gap from the 3rd. Okay. All right, so that's over here. That's there. Okay. So opening range gap from the 8th and the 3rd. Okay. So when we get over here, then we'll look at those. Right? When we get over here in Wednesday's price action. Right? Somebody remind me to pull up those. Matter of fact, I'm just going to leave it there. So that opening range gap from the 3rd, I'm going to leave that there. And that was the opening range gap from the 8th. And then this was the, what is this right here? Oh, that was the fair value gap that I wrote in. Don't need that. We didn't use that today, so I'm just going to delete that. That was just on my radar because we had made it, right? We're doing a review, so we only going to look at the stuff that we used, all right, based off of our analysis. And that's from the 8th. We did use that. All right, we did use that later. Okay, now. All right. So now we're on the 60-minute chart. We're going to go back here to the start of the week. Okay. As we see, when we started the week, remember this right here was the lower inversion fair value gap that we used prior to the week starting. And this is where we started the week here, right? This is the SIBI that we said if we get above this and create an inversion, we're anticipating this to be used as support and we continue higher prices. Right now, coming to the intraday time frame really quick. Remember, we said we identified that we were on the right side of a market maker buy model. You can see this is, it's 15 minutes, but it's okay, right? You can see here, right? It's clear that this is our smart money reversal, right? We can see it here clear. We got our smart money reversal, right? And then we got our low risk buy over here, right? Now, some may want to say, hey, this is a low risk buy, but for me, this is the low risk buy, right? Because we got our smart money reversal and all we did here was consolidate and expand, and then we retraced back to a discount, right? So for me, that's my low risk buy. However you want to look at it, I don't care, right? But that's my low risk buy there because we got our smart money reversal, we consolidated, expand, retraced, and then we delivered above that high, right? Low risk buy, first stage reaccumulation, right? Or first stage accumulation. I say re on the right, right? But first stage accumulation, second stage reaccumulation, all right? But I like to say re on the right, all right? So You can see it clear down here. We're on the right side of a market maker buy model. Coming into the week, as we come into the week, right, we can see how price is giving us a healthy respect of the consequent encroachment of that daily fair value gap, right? We said that we had closed above it. Let's see when we closed above it real quick. Let's jump back up to the daily time frame. So we closed above it here on Monday, right? So anything right to the right of that dotted line is after we had created that inversion fair value gap, right? So we see here that we opened up here on Monday, right? And we had a healthy respect of that consequent encroachment, right? We dropped down a little, traded back up above. Let me close this out, spread this out a little bit so y'all can see it better. I keep forgetting some people watch on smaller devices, right? So on Monday, you see here, we opened up, dropped down, displaced above consequent encroachment and the new week opening gap, came back down into a discount at that consequent encroachment, at that new week opening gap, at that BISI right there, right? That's our first BISI that was created on that move up right there. Remember, it's a first. It's important, right? Tim, what's so important about it? I'm gonna show you later on. All right, so we come up, right, and then we end up getting our closure up here above that right there. So now this right here is an inversion fair value gap starting here. It's an inversion fair value gap. So we're looking for it to be used as support because it's the first daily imbalance that was created on the way down to take out that liquidity. So now that we closed above it, we're anticipating it to be used as an inversion because the inversion of the bearish fair value gap supports the narrative of the market maker buy model. All right. So as we drop down, right, we're inching down, right, and we come down here to consequent encroachment, right? Coming down here to consequent encroachment here. As we come down to consequent encroachment, right, you see we creating a SIBI there as we're moving down, right? And then we come below this first BISI right here, right? We come below this first BISI right there, right? Remember I said it was going to be important, and I'll show you why. If you are bearish, right? If you are bearish and you come to a bullish fair value gap, you're coming down to it. Once you close below it, you want this to be used as resistance to send price lower. All right. But you're bullish. So if price chooses to use this as an inversion fair value gap to push price into some liquidity, you're anticipating it to be used as a reclaimed fair value gap because you're bullish. And as you see here, we came down and closed below this first BISI, used it as an inversion to take out the sell side liquidity, right? Because we opened up the day here. So if you anticipate in price to go up, you want to see it manipulate some sell side liquidity. Where is the sell side liquidity in this run right here? Right there, right? Breakout traders are thinking we took the daily low, so we're going to go lower. Smart money trader says we're manipulating this low because that low is just internal liquidity of our dealing range. We're just coming back into a discount, manipulating out sell side liquidity, right? Utilizing this first fair value gap as a temporary inversion fair value gap to manipulate shorts in, and then we quickly rally back up and close above it, come back down and use it as support, right? Yes, we do trade outside of it a little bit, but look at that, we're respecting that octant, right? We're closing inside of it, and then price pow takes off. And once price takes off and get above this high, right? Now, what is all of this right here? right? We got efficient delivery, and then we leave the area. So now that is a balanced price range. So now what do you not want to see price do? You do not want to see price trade back down into it, right? You don't want to see price coming back down into this area. Why? You're above the balanced price range and you're bullish, right? So what do we get? The next day, right? We gap up in the evening. Remember that crazy, I think it was like Iran news when the president said something about the ceasefires and all. I think it was some crazy Iran news, right? What happened? The algorithm dropped down, repricing all of this here, right? Came all the way down into, right, this bullish order block, into this bullish breaker over here, right? Based off the PEMDAS, right? It's going to come down. What is it going to seek first? Mitigation blocks, breakers, right? Then it's going to seek fair value gaps. Then it's going to seek order blocks, right? It comes back down into a bullish breaker, and then it rallies up. Nothing can stop me. I'm all the way up. It's just going up, 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 right? Up, up, up. Now, we're going to look at this PD array that most people would not be watching, right? For right now, we're going to ignore this here. Let's see what that is. Right. This right here was that. What was that? I think that was the wick. Yeah, that was a wick. Yep, that was a wick. That was a daily wick, right? That we talked about. All right, so we're going to ignore this right now. Now, a lot of people would not pay attention to this opening range gap. If you can't see there, right? That's the opening range gap for March the 12th, right? These are the quadrants of it. I just have the three quadrants marked out. I don't have the high or the low, right? These are the quadrants of that right there, right? If we put it into the 8th grade, meaning look at the octants of it, right, to get more detail, right, we can see how price, once we trade it into that opening range gap way back on March the 12th. Tim, where did you get that from? If you go to regular trading hours, right, we go over to regular trading hours and we look at, right, this is the area right here coming into this Wednesday. This is where price opened up that Wednesday morning right there. If we look to the left, to the left, to the left, if we look to the left, right, what inefficiency is over here to the left, right? Now, for the untrained eye, right, you probably can't see it, right? Because we come over here and I turn this off, right? If I turn this, it looks very clear because I have it on, right? But if I turn that off, right, and look, right, this is where we are, right? You're looking over here, right? Now, you may be able to see the liquidity void, right? You may be able to see the liquidity void there, right? There's no trading in between here, but based off how retail is taught, right? If you see that liquidity void, right, we've traded up into it here. So that means you would only be watching this area of it, right, based off how retail is taught. Because based off how retail is taught, right, all of this right here has been balanced. That's been rebalanced. So this is all that you would be looking at in that area, right? But knowing PD arrays never go stale, when you look over here, you say, hey, I'm looking at regular trading hours and I see that from this closure all the way down to this open, that right there is a opening range gap, because this is where the New York market closed at 4:15 and this is where the New York market opened the next day at 9:30. So I know that there's an opening range gap that big right there, right? And I'm going to pay attention to the octants of that opening range gap, because anytime the algorithm is trading near a PD array, they never go stale, right? So now, looking at just the liquidity void based off of retail logic, look at all of these opportunities that you miss because you have no clue why price is doing any of this right here below that liquidity void that's still unbalanced, right? If you're looking at, you like, hey, why is price reacting, coming down here and reacting like this, right? Because you have no idea that price came down. It traded outside of that opening range gap, right? The bodies respected the opening range gap. We rallied back up, right? Came up into this wick right here, right? Now at this point here, it's trading into that liquidity void that's not repriced, right? But what are we doing? We're coming up to the upper quadrant of this opening range gap. We closed slightly above it, showing strength in price, right? We immediately came back below it, and then we stair-stepped our way back down, all the way down into the rejection block right here, right? At that wick, right? We're just using current price. We're not even looking farther to that direction over there, right? We came all the way down to that octant, closed slightly below consequent encroachment of the wick, quickly got back above the wick, traded back up, right? Just above equilibrium, came back down, right? Respecting consequent encroachment of that, right? This is your deepest imbalance over here, right? Also have that propulsion block that's right there. Last down close candle of the order block that's right there. We're respecting mean threshold of those. Also can't get back down to consequent encroachment of that wick, right? Price rallies back up, right? And this is just looking at the regular trading hours, right? That's why I said we ain't paying attention to nothing else over here. We're just looking at this during the regular trading hours based off of this PD array that most people wouldn't even pay attention to, right? And once we did all this back and forth, back and forth, back and forth, back and forth there, traded up and took out that buy side liquidity, right? What we said, this is a balanced price range right there. Efficient delivery, price leaves it. You don't want to see price coming back down here. Go from there, the counter that's leaving there, up to there. There's your imbalance that's in the discount, right? We trade down. The bodies are respecting that upper octant, respecting that bullish fair value gap. Then we continue up, taking out that high, right? And that's just based off of regular trading hours and looking at a PD array that most people wouldn't even pay attention to, right? And then we're gonna stop right there on that. We'll look at today's price action based off what the New York Times did, man. Y'all do me a favor and hit a like for the algorithm and subscribe to the channel if you ain't subscribed, man. Do anybody got any questions before we jump into today's price action, looking at the New York session? Nothing from nobody. Anybody still woke? Anybody still woke? Anybody still in here? I know we've been here for a minute. Anybody still in here? Anybody still woke? What's going on?
We're here.
What's going on over here? What is this? Oh, I had clicked something. It looked funny over there on my screen. I see something looking funny on my screen. What you think you started? What you think you started, Rhonda?
When I was talking about trying to pass an eval.
Oh, that was way back then? Okay.
Yes.
All right. All right, man. Let's look at today's price action during the New York session. We're gonna look at it on the lower time frame on this 1 minute chart. Before we get into the 1 minute chart, let's get some context clues as to what a going zone. Right, we got a whole lot going on here, so let's get rid of what we don't need here. Let's hide this. That's that. Let's stuff we was talking about. That's that wick. Don't really need it. I could delete that. Okay, so this is today's price action right here. The red highlighted area that's showing us from pre-market New York over to the close of New York, right? And the reason why I came up to the 60-minute time frame is because to give us a little bit of higher time frame analysis before dropping down, right? As we see here, this is Thursday's low down here, and this is Thursday's high. Okay, we opened up the night here, all right, and we traded above Thursday's high, right? And the London was unable to take out the Asian low, right? And then we start to trade up there. Now, what are we looking at here on the higher time frame? When we look to the left, right, what do we see that's important, right? We look to the left here inside this price leg there, right? We don't have any inefficiencies as far as fair value gaps, right? We do have a wick right here, but this wick right there, that was an immediate rebalance. We traded down into this order block and we took off, right? So we got an immediate rebalance there. So price is extremely bullish here. We have no inefficiencies here. We have a bullish order block as we look to the left, right? Where's the inefficiency? There, right there. So we have a reclaimed fair value gap. Why? This is the first BISI created when we're leaving here, right? When you get below it, price uses it as a temporary inversion fair value gap, trade up into it, trade down into the liquidity, then we come back up and close back above it. So we have a reclaimed fair value gap, right? Somebody said they got caught that 4 p.m. Oh, I caught that 4 p.m. long last night. That's what's up. Congratulations. Y'all give it up for yeah, that name right there. Rihanna, amen. Oh, let's say Rihanna, amen. Y'all give it up for that name right there for catching that long. Okay, so boom, right there. We got a reclaimed fair value gap. So I got it in here somewhere. What time is that? 8 p.m. Right? So we got a reclaimed fair value gap over there on the higher time frame there. All right. When we go down, let's drop down to the 15-minute. Right? So looking at our 15-minute time frame, right? This is our reclaimed fair value gap. We're coming into the New York session here. Remember, this is the section we're watching right there inside the red highlight or pink, whatever color it is on your screen, right? So this is our hourly reclaimed fair value gap. So when price is coming down, we're anticipating this to act as support, right? This is just our higher time frame view before we get into the pre-market analysis. All right. Now, we also have, what else do I have here? Right here, right? That right there, that 815 BISI. Why? This is the first imbalance that was created on this move up right here, right? When we traded down there and blast off, that's that first imbalance that was created on that move right there, right? What do we say? If you have that first, right, you're looking for it to, right, either act as a reclaimed or an inversion, right? So when we trade, when we take out this liquidity and we trade down, we close below it, right? Once we close below it, we're inside a lot of manipulation throughout the day, right? We come back up, we close slightly above it, but we end up using it in all, right? There's some other lower time frame stuff we traded up to, but overall we end up using it as an inversion to take us down into this liquidity, right? Once we came down into this liquidity, right? There's something else we dropped down in here too. But once we came down there, right, look at how price kind of, we're trading outside the lines, but look how we're kind of using that reclaimed BISI as support right there, right? And then we're going to go down to our 5-minute time frame, right? What do you see here? That's that first imbalance when we took off right here, right? Do we have that marked out? I don't know if we have that marked out. I probably don't, because it was from like the 5-minute. So I'm just going to, I'll just borrow this right here, right? Right, that's our, there's a volume imbalance there. Yes, there's a volume imbalance there. Okay, so that's our 5-minute. All right, there's a 5-minute imbalance down there. That's that first. Remember what I told you about them first, right? That's that first, and that's from 5:15 this morning, right? Right, so we got that right there from 5:15 this morning, right? That's that first. Now you say, Tim, you say we want it to be a inversion or a reclaim. I'm glad you said that, little Timmy Rogers, right? If you look very close right here, right? How does Michael teach reclaim, right? You can do a reclaim if you use it. We trade it down right here. I don't know if y'all can see that wick. It's kind of hard to see them wicks sometime when I be moving the screen around. Looks like you can see it there now. Okay, right? So we created it, used it here, traded away, right? Now if we look, right, we traded away, and this right here, we're coming back down to it and reclaiming it. Right, came down and reclaimed it right here. You can reclaim by using it, trading away, and coming back, or you can reclaim by closing on the opposite side, then closing back on the correct side and trading off of it there. So that's that first imbalance on this takeoff here, right? When we came back to it, we used it as a reclaimed bullish fair value gap, right? That's the reason why we overshot these, right? Because price is coming down into this reclaimed fair value gap from this London session, right? This is coming from that previous session right there in the London time right there. Okay, time and price, right? We're coming back down into that London session, right? We're reclaiming that. Then once we reclaim it, we come back up here, right? Oh, let's go here before we talk about that, right? At our pre-market, right? This is our highest high. This is our lowest low, right? It's our pre-market range. Price is in a buy program, right? We're in a buy program. And so if you're in a buy program, you want to see price engage sell side first, right? When we open up at 9:30, let's find our 9:30 open. This is our 9:30 open here, right? This is our 9:30 open there. All right. Once we open up at 9:30, what do we not do, right? We do not engage any type of liquidity. We don't take out our pre-market sell side. We don't take out our pre-market buy side. We just over here like Aaliyah, back and forth and forth. We just going back and forth, right? So what are we doing while we're going back and forth? Let's take a look, shall we? Right? Remember our first BISI that we talked about that was created at 8:25, right? At 9:30, we opened up, we traded up, right? Failed to take out the buy side, right? We traded back down, touched that first, right? Traded back up, failed to take out the buy side, traded back down, closed above consequent encroachment of that first, right? We wick down into consequent encroachment of the opening range gap, closed right at consequent encroachment of that first from 815, dropped down into the prior day's high. Who remember what we said was right around in close proximity of that prior day's high? Right? Gang, who was in here this morning? Which one of y'all was in here this morning? And who remember what we said was right in close proximity of that prior day's high? Who remember? Who remember? Who remember? Nobody? 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 Oh my God. We said that the afternoon high and the morning high from regular trading hours were down here in close proximity of that daily high. So that's your morning regular trading hour high. That's your afternoon regular trading hour high, which is the exact high. So we said we're not going to bother marking these out, but we know that they're right there at that daily high. And since we're above price, we're watching for those and we want to see them act as support. All right, that's what we said on the pre-market analysis day. It was a public stream. Go back and look at it if you don't believe me. We came down into that old high from regular trading hours, rallied up, right, took out that buy side, right, took out that buy side and made relative equal highs. All right, Tim, what's so important about that buy side that we took out? Let's talk about it, right? What's the time on that candle? 9:30, right? What's the time on this candle right here that traded above it? 10:30, right? So between 9 o'clock and 10 o'clock, that right there is the highest high that was created between 9:30 and 10 o'clock. And that will be your opening range buy side liquidity, your opening range high between 9:30 and 10 o'clock is your opening range, right? So there's your opening range high right there, right? Over here, let's find 10 o'clock. This is 10 o'clock right here. So that means that this low right here at 9:40, that right there is your opening range sell side, because that's the lowest low that was created before 10 o'clock. So opening range sell side right here at this 9:40 candle, right? Gang, y'all can see where I'm going with this. Y'all can see if you're in tune, you can see where I'm going with this, right? So now we have our pre-market low, our pre-market high, right? The algorithm has established a range. We're waiting for the algorithm to engage with one of these liquidities and then tell us what it wants to do, right? Algorithm has not engaged at this time, right? The algorithm has not engaged with either liquidity, but never fear, there's another from our handy dandy time is king graphic. Let's pull that out. Let's pull out the time is king graphic, right? If we look at our time is king graphic, right, we have this little thing called opening ranges, right? So our opening range is the first 30 minutes of a thing, right? For our sessions from 9:30 to 10 is our opening range. This is a algorithmic dispensation in time. So this is a algorithmic dealing range. Right? So you set your highest high from 9:30 to 10. You set your lowest low from 9:30 to 10. You now have a algorithmic dealing range, right? On this 10 o'clock candle, right? What is this? This is during a macro window. During this macro time, from 9:50 to 10:10, on this 10 o'clock candle, price trades down and engages what? One side of this dealing range. What is price? Price is bullish at this time. What is price engaging first? Price is engaging sell side liquidity while it's bullish. after it engages sell side liquidity, it hits an anticipatory reactionary point, and then we get a payout. We take off and we engage the opposite side of that range, right? Now that we've gotten our bullish Judas swing, right, inside this range, getting that bullish Judas swing after engaging with the liquidity, now we have a discount PD array there. And notice what else we have. We have the first SIBI that was created in this move down. We came up, closed above it, and then we retraced back down to a discount, traded into that first, and then we went up to where the pre-market buy side. Once we went to the pre-market buy side, now we have engaged one side of the liquidity from our pre-market. And once we engaged that, we came down, got a bearish break in market structure, right? Cut through this balanced price range like butter, right? Traded back up into the imbalance, leaving that balanced price range, and then we traded down into the opposite side of that range.
Let him cook! I said let him cook!
Man, y'all do me a favor, hit a like for the algorithm and subscribe to the channel if you ain't subscribed, man. That's all I got, man. I can't keep doing this. They gonna ban me off YouTube. Do anybody have anything for me? Do anybody have anything for me? Can anybody see, even though today was very difficult price action to read, but if you, I shared this in the Discord, and I shared it in my community post on YouTube, right? If you go to my community post on YouTube, they said now you can actually interact on the community post now, right? They said you can interact on the community post now. If you go to my community post right here, you'll see that I shared this on YouTube, right? I said, for everyone that was on the public pre-market analysis live stream today, I just want to say that this morning's price action was very difficult. However, when you understand order flow and submit to time and price, you can carve out a decent living in these wild trading streets. Remember, let the algo set a range, engage with liquidity, then tip its hand is the easiest trading strategy. More advanced traders can pick and choose once that range is established, right? I shared that today, right? And I shared, you know what I'm saying, some P&L that I made off of, and you can see these are the levels, right? These are the same. I can't blow it up, right? But these are the levels that we have over here. The pre-market high, the pre-market low, right? The opening range gap. I even had an event horizon marked out right here, right? I had an event horizon marked out there from that low to that low, and you can see how price used that, right? You can see how price used that event horizon. Let me find the actual picture there. Downloads. I'll use this one here because it ain't got my financial business on there, right? But if you look here, you see that low right there, around 10 something, and then this low right here around 10 something, right? If you go, because when we come below this low, you're looking for that speed below that low right there to take us down into the liquidity that we're eyeballing. So if you go from that low down to that low there, right, you see price came halfway in between that range. That's event horizon. Well, one case of event horizon, and we start to do right there, right? We got a little bit of a deeper retracement back up, and then you see here from that high to that low, right? From that high to that low, that's the range that's leaving this balanced price range. Price comes right back up into a slight premium of that range, right? Still respecting the fair value gap right there. And we drop down into the liquidity, right? And that's where price was when I shared the photo, right? That's what price was when I shared the photo. And if we go down here to a 1 minute chart, if you look at it on, right, the actual chart there, right, this is where price paused it there. And we were looking at, get my event horizon, right, that's your low there from 10, right there. And if we come over here to that low right there from 532, right? And then our other lows was there, right? So we look at that low there, right? So that's our, you see, make sure I'm looking at the right area. Nah, that's a different one, but we still using that as event horizon. Let me see, which one was it? I don't have my macros on there. See here, midnight. I want to make sure I get the right one. It was this one here, that one, and this one. That's it there. There it is right there. So that low and that low, cause it was all inside this range here. That's the right low we're doing there. All right. So price, look there. Expand this out some. All right. So we look there. Price came down, right? Hit event horizon right here. Traded back up there, respecting the SIBI right there. We got that SIBI there, cause we put a Fibonacci tool on there from the highest high down to the low. That wick doesn't exceed halfway, respecting consequent encroachment of the SIBI right there. Right there. So we hit event horizon, bounce back up into the SIBI, and then once we crossed event horizon, price fell into the gravity of the next PD array. Help me, I'm falling. Right there. Right. And you can use event horizon in between two PD arrays. That's how event horizon is used. You have to understand the narrative, you got to understand the order flow, and then that event horizon can help you with your entries, help you with managing your trade, help you with understanding, hey, what's going on my trade? Why is it just stopping right here in the middle of nowhere? If you wasn't privy to that 15-minute fair value gap, you know what I'm saying? If you wasn't privy to anything, if you weren't privy to this first BISI right here on this move up right there, right? If you weren't privy to that, now this is another one right here that you hear me talk about a lot when I say it's the first off displacement and it's the first period, right? If you look here, this right here is our fair value gap, leaving this area right here. Tim, why do you say that? Because all this imbalance here is inside of this. Oh, and let me see, did I stop my recording? Yeah, I stopped recording, so this ain't gonna be in no gym from the live stream. Too bad. So this imbalance here is inside all of this efficient price range, right? But it's the first imbalance in this entire move. This is your fair value gap. Why? Because it's the first imbalance after leaving this area. So this is your first fair value gap right there, right? And this is your first imbalance, right? So once we closed back below this fair value gap, right, we can see that price used it as an inversion fair value gap, right? And then this right here is the first overall. So when it came back to this inversion fair value gap, right, based off displacement, right, what do? We quickly got back below, right, that first one from the overall range and then used it as an inversion fair value gap. right? So you got the first one off displacement, used as support, used as resistance, right? The first overall, right, used as support, used as resistance. That's true support and resistance. I hit the wrong one. Hey man, that's all I got, man. If ain't nobody got nothing for me, we're gonna go ahead and call it there, because we've been on here for a very long time. Shout out everybody that muscled through it. Shout out everybody that muscled through it. Who we still got up in here? If you still in here, drop a 1 in the chat so I can see who's still rocking with your boy after 2.5 hours. Who's still up in here with your boy after 2.5 hours? Take all of this off. I ain't gonna worry about it. I clean up my charts when I do my weekend chart prep. Ain't nobody dropping nothing in the chat. Okay then.
Me and Rhonda did.
I was looking on YouTube.
Oh, sorry.
I was looking on YouTube. I can see y'all. I can see y'all in here. Y'all in Zoom. I can see y'all in here. Yes. Rhonda said, oh, you talking to YouTube. See, Rhonda got it. Some of us, yes, we rode the short bus. Kim, appreciate that, Kim. At least Kim dropped one in the chat. My feelings ain't so hurt. My feelings ain't so hurt. Yep. Let me ask y'all a question. Speaking of questions, for anybody that's in the Smart Money Manuscript, we got our monthly Q&A tomorrow. Got our monthly Q&A tomorrow. Tomorrow's the second Saturday of the month. So we got our monthly Q&A inside the Smart Money Manuscript.
I thought we had it last Saturday.
We had it last Saturday? Is
Yeah.
the first? Is it the first? It's the first Saturday. Never mind. It ain't the second Saturday. It's the first Saturday. But okay, we don't have that. Tomorrow's with the teenagers. I got teenagers tomorrow. I have it with the teenagers every Saturday. So I saw some on my calendar and I thought it was y'all, but you know what I'm saying? Yeah, you're right. You're right. I'm wrong. I'm wrong. You're right. I'm wrong. We had it last week. It's the first Saturday, not the second Saturday. It's the first Saturday of each month. Hey, that's it, man. Shout out to everybody who, is starting to make sense. Shout out to everybody who is starting to click for. People be reaching out to me all the time and like, hey, it's starting to make more and more sense. I'm starting to get more and more comfortable with it. And that's the goal, man. That's the goal. One day at a time. You know what I'm saying? Just build on a little bit of understanding at a time. Don't try to learn everything at once. Don't let these YouTubers, you know what I'm saying, that's got all this stuff to say about ICT. Man, ICT is so complicated. You know what? You got to realize when everybody else is talking about you, that means you're doing something right. Mm-hmm. Michael, what did he say this morning? What did he say this morning?
Yo, he said somebody actually threatened him. I thought that was crazy. Yeah, because I don't know if they lost money or what, but he said he posted on X. I didn't go back and watch it. And then he had a crazy incident happen. Just somebody else had road rage. They were two separate incidents, but just got to be careful out here because some people are crazy.
Man, threatening somebody. That's crazy. He got to be interfering. Michael got to be interfering with his money. That's what it is. Because I was just riding and it was a guy, he like on my feed because he had like a community and I tapped in for a while and, just check, cause I just like to check out different traders and, his thing didn't really it didn't interest me. You know what I'm saying? I'm not gonna change what I trade, but I just like, you know, hanging out with other traders. And I saw something pop on my feed from him, and he was like, don't listen to all this ICT, ABC, SMC, making it complicated. And that's what really sparked this in my mind. When everybody talking about you, that means you're doing something right. Because I can log on to YouTube, X, or anywhere. I don't hear nobody disrespecting anybody that's selling supply and demand. I don't hear nobody disrespecting nobody that's selling trend lines. I don't hear nobody disrespecting nobody that sell indicator trading. But everybody got beef with ICT. Everybody got beef with people who trade ICT. Everybody claim that the ICT traders are stupid. Everybody claim that ICT don't work. But don't nobody got beef with all this other retail stuff that actually ain't rooted in some type of algorithmic theory. It's just all guessing. It's all guessing. You can't repeat it without, you know what I'm saying? You can't repeat it to the degree that you can repeat the ICT concepts, right? And y'all see it every single day. Y'all just like Rhonda pulled up yesterday and was like, to see it play out in real time, the things that Tim was talking about, to see it play out in real time was just fascinating, right? Because people always say, yeah, when you're doing the ICT, you be cherry picking stuff. But when you have people coming out saying, hey, I took this concept based off what he taught and I saw it play out in real time, right? I saw it play out in real time. I took a trade based off it. I tape read it based off. I saw it play out in real time. Nobody can refute that. All thing they can do is say he can't trade because he don't trade real money. If it's real money or paper money, is the concept working? Well, when you're trading with sim trading, it's a different emotional thing, but is the concept working? But he can't do that on a live account because you wouldn't have the courage to push the. Is the concept working? You can't tell me it's not working because you see it working just like I see it working. I don't care if it's on a sim account. He tell you it's a sim account. He tell you not to copy him. But you can see it's working. You can see it's working. That's my soapbox moment. I appreciate y'all for hanging out with me, man. After I get me something to eat, then I'm gonna work on these gems from the live stream. Do y'all want me to post some gems? Do y'all want me to post the gems from the live stream? Y'all know how I do it. I do it from the higher time frame chart, the first intraday, and then the New York time frame. Y'all want me to repost those? Are y'all gonna go back and look at them? All right, then, man. My eyes red. I must be tired. All right, man. If I decide to do a weekend chart prep, I'll see y'all Sunday. If not, gang, I'll see y'all Monday for the overnight. Not the overnight price action, for the pre-market analysis at 9. Hey, man. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. As you mean Big Spot if you don't hablo español. Y'all be safe out here in these trading streets, man. Gone.